Hi guys, welcome to WIC channel. My name is Rifat. So on February 14th, on Valentine's Day, Canadian Tire released their corporate earnings, and I'm here to kind of give you a feedback and to kind of recap the important points and to see kind of give you guys my outlook and kind of go through the financial bit in details and just to those highlight those important points as to where they were. So let's jump into it. So kind of after going through earnings, I mean, it was not phenomenal. It was not bad. I would say it's neutral. And I think the stock kind of reacted that way also, kind of say that it was not exceptional. They were kind of mediocre, I would kind of say again. So they beat on certain stuff. They kind of didn't do on other brands, other stuff, with a great increase. So that's the reason they kind of traded very badly, dropped very low. So but on the overall, I'm pretty optimistic and kind of see how they will do in the long run. But I know for now, just kind of couple of areas they didn't do as much great as they wanted to do. So, but I know I'll go through the data, kind of show you guys as per what analysts were expecting and what they reported, and go through all the kind of stuff that they're planning for 2019, which could be an exciting year for Canadian Tire. So let's jump into it. So let's go to my supercomputer and I will go through those earnings with you guys and come back to the whiteboard and finalize the whole thing. Let's go. Hey, well, thank you guys for joining me in front of the supercomputer. So you guys can see I have the chart opened up here. The brand is, I mean, the stock has been trading very badly, like I told you guys earlier, because of the earnings came out so. They kind of traded around 148 in the beginning of the day and ended up at 140. So as you guys can see here, I'm going to show you afterwards the screen here. The earnings came around for the year around now for the quarter, the fourth quarter, at 4.1 billion, which analyst, let me pull up the analyst here. Analysts were expecting something around for the quarter's average of 4.2, which came at 4.1, which is lower than the lowest estimate, right? But they still beat it a year ago, but like still not lower than the estimate. That's kind of one of the reasons that drove the stock low. And also the year over year came around at 14.1 billion, which is kind of up also from last year, but still lower. Like, I mean, it beat the lowest estimate, but the average estimate was around 14.16 billion, so it dropped. That's one of the reasons also. That's another contributor to the stock dropping also. Another thing is where the earnings per share, they beat earnings per share because it's normalized. Normalized is it takes out any one-time cost can be related. So example, there's one-time cost for this quarter or some stuff like that. They take it out and they calculate the earnings per share. So for that, they beat expectations, which was at $4.78, which was expecting around $4.69. And the year over year, they came at like 2018 came at $11.94, which also beat expectation, right? But when you kind of dive deep a bit, kind of dive for the diluted, that came a bit low because, like, I mean, when you put in the expenses that they had, right? Those one-time expenses, it didn't even beat the expectation was lower than what was expected, right? And even less than year over year expenses, EPS, which was last year they had a $4.10. This year they have $3.99, right? Which is lower than last year and also lower than the expectation. And same thing applies also for the EPS of year over year, which was lower than last year. It came around at $10.64, which last year was $10.67 and lower than expected, right? But this is when you take into account the expenses, one-time expenses they could have had for that quarter or stuff that's only related to that quarter. So when you take those into account, they had less. And now we jump into the financial sector, which is something I kind of talked about. I was kind of bullish. The revenue grew year quarter by 10% and full year of almost 9%. which I find is very good for a credit card company that's like, in Canada, there are a lot of people, and it's highly competitive area in credit cards, and they're still able to grow, which I find is very good. So another one more thing I liked about the thing is the share buyback plan. They announced they're gonna buy between. They announced last year that they were gonna buy between 300. They announced, sorry, in November they were gonna buy between 300 and between $3 to $400 million worth of shares of Class A. To this day, the company bought up to 231 million, right? Which is also good. I mean, they feel that the company stock is undervalued, so they're ready to buy. So they announced it in November, and they already executed in buying back 231 million shares. And again, they announced another one for this upcoming year. They announced up to 5.5 million of they can buy, and that represents almost 10% of the current floating shares. So come again, I can say they even themselves see that the stock is undervalued. This is something also I listened to the conference call that they restated also that they feel like the stock is undervalued, and because of those macroeconomy and we come to consumer confidence and like the government and the tariffs, all this kind of stuff comes into play for the reason the stock is kind of trading very low. And over here we can go as for the last year, they did the same thing. They approved a share buyback plan, which is up to 5.9 million shares, and they bought around 3.8 million and so shares they bought in the open market at an average price of $157. So I can see that is when I see that as mark is that for them anything below 157 kind of they find undervalued. So they see it as a buying opportunity. And when you kind of go through their chart, it's very interesting is, go here, let's go for a year here. Like the only time that it was kind of under for a year, we'll say from, I think we can go to January. No, they start from March, right? From March till now, it was really from, let's say from maybe September. Yeah. From September onwards is the only time that kind of dropped. So that means they really purchased afterwards. So for them, they really saw it. That means they bought it heavily on those times to kind of go into those purchase, right? And they purchased all in the open market. And the open market, they have a limit of 59,470 shares maximum per day they can be purchased. And that means I did an average that they bought those between around 2 months and like a couple of days. They bought that during those. They bought between 2 months. So that means they from September onwards they were buying pretty much shares. So that's also very good. A couple of notes that when I listened to the conference call, I want to mention is they really see like the Heliansen growing by 30% this year. That's one of the main things that they like, the revenue. And also the increase of the Triangle program and the Triangle credit card increased by 32%. Mostly that's really good. 15% of the transactions done on the store was done by a CanadianTire credit card. The sales purchase was done by that, which is very good. And now around 55% of their sales was done by someone has done with a Triangle program or enrolled in a Triangle program, which is good because back in 2017 they didn't even have those data. So now they do have the data, which is phenomenal because they can use that data for later on, like within 1 year, right? Because 2017 they had nothing. Now 2018 they have something great. And what else did they mention? Like let's make sure I have everything. Yeah, so I mean they plan on focusing more on their execution plan what they had, and also their home delivery is live. So, and also they kind of developed the new assembly program also, that you can have your stuff assembled, which is not the case. So I mean they continue to focus on their strong balance sheet, Their revenue continue to grow, and also like they mentioned is for the December, it was kind of, they were heading to a strong December, but because we had a warmer than normal December period, which caused their sales to drop. But other than that, like I mean, they continue to focus, and they, like they mentioned before, they feel like the stock is undervalued. So you know what? Let's go to the whiteboard and let's finalize this whole thing. Let's go. Welcome, guys. Thanks for joining me from the whiteboard. That kind of resumes the whole Canadian Tire financials. I mean, the quarter was kind of like, you know, like neutral, I would say. You know, it's nothing exceptional or bad. Like I keep on repeating, it's neutral. I think it's just kind of people sold off very fast, and now it's start entering a zone that's very interesting for me, that I might really increase my position with them. But until, like, I mean, and this year I think is going to be a really extremely important year for Canadian Tire, because they did a lot of investment in 2017. So this year they kind of expecting them to pay off, to show investors that they do good stuff, and to see, right? And also the financial area, the division, sorry, and Heliantiv, which kind of grew in consequence, and it's something I expect to grow. When it comes to retail and all this stuff, I'm not really expecting something phenomenal, but I'm expecting growth also in that area. So we'll see. We'll see what happens. This is a very vital year for them, and I think going forward also, all the investment that they make is going to pay off in the long run, which is a company that's really focused on the long term, and their share buyback plan, which increases more confidence right now, that they have confidence in their shares and their company, and also the dividend plan, which is continue to give value back to shareholders. So you know what, this is Q1, Q4, I'm really sorry, Q4 for their earnings results. So let's see what happens for Q1 and moving forward. I'm looking forward to an amazing year and see what kind of results Canadian Tire will come for us. So you know what, that's about it for the video. I know, drop a comment if you guys owning some shares, or if you guys listen to the quarter conference call, and give me your thoughts. I would love to hear from you guys. So that's about it for this video. If you like the video, hit the thumbs up, subscribe if you guys didn't subscribe, and also I have links down below for Twitter and the Facebook group. Please go ahead and join me there. That'll be phenomenal to see you guys there. And that's about it. Thank you very much for watching, and have a wonderful day. Whoosh.